excited to have you. Okay, so we're going live. I don't see any of the ladies on right now, but we'll go ahead and get started. I have with me one of my classmates, and, and she is willing and dealing into all type of things. So I will let her do her own introduction.
I'm Erica Simpson. I graduated from Lancaster High School with Sophia, and we've been knowing each other for more than 20 years, telling our age now.
Oh,
And I'm excited to be here. I'm the owner. I'm a serial entrepreneur. I own a finance company, an insurance company, a real estate company, and a business consulting company, along with a used car lot.
wow.
um,
Serial entrepreneur.
right.
And
So
I thought I was just multi-passionate entrepreneur, honey. You are serial. You got that right.
some of my businesses are based in South Carolina, and some of them stretch across the United States. And some of my investments and things that I do, and my latest venture is Bossed Up Academy, which is my business consultant business, because a lot of people are trying to become entrepreneurs now with the current state of the economy. Or even if they want to keep their day job but need a side hustle in order to effectively do that. And with my 20 years of business experience, this is not only a way for me to produce an income, but also as a way to give back.
Okay, that's great. That's great. And so now we just did another live with another young lady about credit score. So this one is first-time home buyers. So my first question for you would be, how important is our credit score when we're getting ready to start looking for a home?
You will get a tri-merge. Most companies will pull all three credit bureaus. And it's different between your credit score that you might see on Credit Karma versus the matrix that they use with most mortgage companies. But all mortgage companies do not use all three scores. So depending on what agent you're working with, they should be able to tell you. But as a rule of thumb, they do use TransUnion, Equifax, and Experian, and they take what they call the middle score. So if you have a 700, a 650, and a 600, then everything is based off that 650. But we do know some banks that only pull Equifax. So if your Equifax is good, because sometimes when you're going through credit repair, one score may come up faster than the other because all companies that you may have had credit with in the past may not have reported to all three credit bureaus. So that's where the difference of the scores come in. So you may need to go with a lender that only pulls Equifax if you may have or have had some recent credit challenges.
Okay, so is there a number? I know you said 700, 650, or 600. Is there a particular number we should even consider getting our credit score to before we talk to a realtor?
I would say at least a minimum of 580. FHA, which is a federally government-backed loan, there's no middle score, but the banks create their own overlays. And when I say overlays, Wells Fargo may tell you that your credit score needs to be a 620. ABC Mortgage Company may say your score needs to be 580. So the bank or the institute that you're going through, they're the person that determines the minimum score requirements. But we've just found that mortgage brokers who can do under a 580, they have a really difficult time actually closing the loan, even though they say that they can do the lower scores. But since there are so many, if your score is under 580, then that means a lot of time that you've got some credit challenges that are recent that need to be dealt with, and it makes it difficult to get a mortgage. We do have another program that we work with in rural areas where the government actually subsidizes your payment. They what they do is, say your payment's supposed to be $1,000. Well, they'll come in and pay $200 or $300, whatever you qualify for. So then that way, if the mortgage payment is $1,000, the government will subsidize $200. Well, your own out-of-pocket monthly is only $800. It's a really good program. We're pushing it, and actually, we're a direct lender for it. Our company is, and it's valid in all 50 states, but it's limited to the rural areas. That program is not credit score driven, but they don't want you to have collections and charge-offs. So, well, they don't want you to have
any at all.
Right. Okay. They don't want you to have any at all. So people that say, okay, well, I don't have any credit or I have limited credit, we can get what they call alternate trade lines, such as your light bill, utility bills, insurance, cell phones. Your alternative credit are things that don't report on your credit report, but you have a history of making those payments and making those payments on time. So if you're limited in your credit, then we can do the alternate trade lines.
Okay. Now you brought up the mortgage amount. I'm sorry. The mortgage amount. So should I have like a housing budget prior to looking at the home, or prior to even worrying about my credit scores? Now, like, should I say I can only pay this amount, so is there a certain amount of type of house I should be looking for?
Okay. A lot of times you can get approved for anything. I mean, we have lenders that will allow you to go to 55%. We'll 31% on, but it's about what you're comfortable with, because they're not going to factor in how many times you go out to eat. They're not how many trips you go to the mall. So sometimes I would tell people to use your current rent as your baseline. And if you want to go for that, I would be, prior to getting a house, say my rent is $800. But I want $190,000 house, which may be $1,000 a month. Put $200 into account every month. And if you don't have to go back into that $200, that means you can afford $1,000 house payment. But if you get into that $200, then you may want to rethink your situation, because, like I said, what you're willing to pay or what your lifestyle will accommodate for is a totally different.
Can you hear my son crying? In the back, you can. My goodness, Zachary. I am a single mother, and I have 2 toddlers and 3 teenagers in the house. Okay.
Oh gosh! You
let me give him my phone. Maybe he'll watch YouTube. You know that's the thing. They be on it. Zach, he done pull him back in there. He trying to fight to get out here, girl. Let me text him, tell him, bring him, let him get my phone. And he on the game too. I do apologize, but like I said, our group is single mothers anyway, so everyone understand. And he's not looking at his phone. Okay, so now, do I need a realtor to start looking at homes, or can I just go out and do it on my own?
Okay, I would suggest you to get an agent, because if you go out on your own and say you contact a listing agent, you tell that listing agent stuff about you, need to know, and they use it in negotiations because they're working for that seller. So it's kind of like, would you go charge with murder? Would you go to court alone and represent yourself?
I'm trying to give him my phone. I can hear him. Here, put it on YouTube. He just want to get to me.
At least you know your love.
Huh?
At least you know your love.
Yeah. It would be different if my daughter was home, but her and her friends went to the mall.
Oh.
Of course, you know, the girls are a little better with him, but he usually stay with Zachary. Easy. See? He got quiet, girl. YouTube does it. YouTube does it. Okay, I've also heard, now I'm coming up on 3 years, and I did use one of your agents when I purchased my home.
Yeah.
Home, and I'm coming up on 3 years now. I've been here in this house. So that was another reason why I wanted to do this. It's since it's coming up on the anniversary. And of course, some things I didn't know about, and some things I did do my own research, and then some things just really didn't pertain to me. But my next question is, how about those companies that ask you to get pre-qualified? Is it necessary that I get pre-qualified for a loan going into it, or can I just go through the normal process?
I would get pre-qualified. It's kind of like going to Walmart. You wouldn't go shopping and get to the checkout and say, let me go home and get my wallet. So I would get pre-qualified because you may be looking at houses that are too cheap, or you may be looking at houses that are too expensive if you can't translate the dollar amount of the overall price into a monthly payment. Because the monthly payment is what's going to affect your budget every month. So some people will say, oh, I can't afford a $200,000 house. Well, it depends on what your rate is. And right now the rates are low. Yeah. So that increases your buying power. So you may be thinking, I can't afford a $200,000 house when right now you're paying $1,000 in rent. And your house payment gonna be $1,000 at $200,000. So I tell people, don't look at the overall price of the house. Look at the monthly payment, because that's what's gonna affect you every month as to your ability to pay or not pay.
Oh yeah, okay. And so say I've seen a lot of times they say how long has it been on the market, or you know, if it's like an older home that they're selling by the owners or whatever. What's the importance of knowing how many days the house has been on the market?
Because generally now in this market, depending on your location in different areas, there's different things going on. Now, if you're going strictly off of days on the market, you still want to know why it's been on the market for as long as it has. But if say you're in a rural, I don't know where everybody else lives in here, I mean, that are on this live, but say you're in rural Great Falls, well, and it's a $200,000 house, well, that area doesn't have a lot of people that could sustain or support a $200,000 mortgage. So if a $200,000 house came on the market in that area, it's going to tend to sit a little bit longer than a house that's $40,000 that the majority of people can buy. So I would have the agent to question the listing agent about why it's been on the market for as long as it has. It could be where the people don't ever want to show it. I've had situations where you talk about divorcees where the husband, he doesn't want to show the house, but the house is in the wife's name. So he never lets anybody come and look at the property. So it's on the market for 2 years because he wants to live there for free because he knows she's going to make the payment so that she don't ruin her credit. Yeah. So you have different dynamics that will lead to that. But I would ask the appropriate questions to find out what is going on with that situation if there has been more than normal days on the market for a property.
Okay. And like what's okay, so basically you just depending on the area.
Right.
Because something could be on the market for 3 days and just be ragged, and something could be in the market on a year, just depending on the circumstance.
Right. So you want to know not only the days on the market, but you want to know the average days on the market for that type of property in that particular price point in that particular area. Mm-hmm. Because it may say that, you know, like I said, in using the rural area of Great Falls, that a $200,000 house, if it's been on the market for a year, that's not unusual because they don't have that many $200,000 buyers for that area. So you need to know, you know, what dynamics of that particular area is and what's the normal marketing time for a property.
Okay. And so I do have some friends that they are hesitant about buying because they're like, you have to have all this money up front, then you have to have money at closing. And are closing costs really that high?
Generally, you're going to be looking anywhere from $3,000 to $6,000 on closing costs. But those can be paid by the seller. Mm-hmm. Some of the costs can be absorbed by the lender. Mm-hmm. So there's ways to get around it rather than going in your pocket to actually produce the funds. Also, when you were saying that the group that we're talking to here tonight, they may have owned a house when they were married, and now their life has happened and their situation has changed. You don't have to be a first-time home buyer to qualify for 100% programs. Some programs are for people that don't have ownership in a property right now at this minute today. So you can still qualify for some of those things, even if you've had a foreclosure in the past. That, you know, once your time has lapsed on that, or if you have a very good reason, there are some exceptions and some things that some lenders are willing to do. So don't feel like, you know, and I think that a lot of people that have been in a home ownership situation before are more fearful sometimes than first-time home buyers, just because they kind of got PTSD on home ownership because they kind of got stung the first time.
Yes, yes, that is true. Now, what expenses should a person expect as, say, a first-time home buyer, or even if, like you said, they had a property before in their marriage or something, and now they're looking to buy by themselves? What other expenses do they expect to have?
Okay. Sometimes it's earnest money. And that's good.
And what's earnest money.
And that's good faith money, a deposit that you're putting up to kind of tell the seller, while I get my loan, I want you to hold this house, and I'm going to put my money where my mouth is, that I'm serious. And usually, depending on the price point of the house, it's usually $500 and upward. Also, now we have due diligence money, where you forfeit that money, but you just get out of the contract within a certain period of time with no consequences.
So due diligence money is, say, I was looking to buy and then I changed my mind, and so now I forfeit that money.
Right, because that's compensation to that seller for having their house off the market and potentially missing another buyer.
Okay.
So, but if you go through with the sale, you get credit for it.
Okay. So it goes toward, say, your down payment. Okay, the purchase. Okay, great. That's good. Now, as a professional yourself, are there any other suggestions or advice that you would have and give to any of the ladies?
Okay, I would just say get your credit check. Even if you planning on buying next year, your list is not up yet. Get a head start, because sometimes people have errors on their credit. And identity theft is very prevalent nowadays.
Yes.
So you don't want to be at the 60-day or 90-day mark on your lease and think, oh, well, I pay all my bills on time, I won't have any problems. And then you got an error that you got to correct or something that you wasn't aware of. So I would get started early in the process. Also, another hurdle that a lot of people face is DTI, which is debt to income ratios.
Okay.
Where they want to know if you got a car payment, some loans, student loans. You want to know what that is, because based on your debt to income, depending on which program you go into, it can hinder you from getting the house that you want, even though you may have a 700 credit score.
Okay. Okay. So, excuse me. We're getting ready to wrap up. I don't see any questions in there. Hello, you guys. If say any of the ladies have any additional questions, how can they reach you?
Okay, they can call me on my cell phone at 803-416-2194. I can be emailed at ericasimpson@ericahomes.com.
Okay, ericahomes.com.
And you can follow Boss Up Academy or Erica Homes either on IG or Facebook.
Okay.
Messages at both places.
Okay, that's great. That's great. And like some of the ladies, not a lot are here locally in the Carolinas. I do have a few that are out in different parts of Texas on here. I think I have a couple from North Carolina that's on here. So it's a wide range, not just here in this area. But I really do appreciate you coming on and talking
to us. They need assistance, even though they're not in our immediate area. They kind of need some help with navigating, or if they are working with somebody and they're not really sure. And then also we work with different agents all over the countries. We can refer them to somebody that works their area. Oh, that's really great. That's really good. I'm so glad you said that. Okay. And I do want to just thank you again for coming on. I really do appreciate you. Yeah, and anytime. If I have any more questions, I'm in the live broadcast. We'll look in the comments to just see if we have any comments, and we'll just hang in there just a few more minutes if anybody else comes on with a question. Is that fine? Yeah, that's absolutely fine. Okay, great.